Alrighty, what is going on, Discord family, and welcome back to another edition of Top Down Analysis with me, T Hobbs. Today is February 16th, 2025, year of our Lord, and we will be reviewing price or discussing price, E-mini Dow Jones, the S&P 500, and the NASDAQ. Also, briefly go over the volatility index. We're going to start off with the monthly charts as we usually do. But again, just like I did in my last video, right? I hear a lot of chatter about, oh, the market's about to turn bearish, all of this fear, tariff talk, Trump talk. Listen, at the end of the day, you have to be able to zoom out, right? On whatever instrument you're trading, right? You got to take the catbird seat, so to speak, right? And you need to be able to zoom out and look at this market, how big money is looking at this market. They're looking at this market in quarters, right? Quarters are fiscal years, right? They start in October. Every 3 months from there, the quarter ends, right? They're not looking at the 5 minute, the 15 minute. They're looking at the quarter. So in order to look at the market from a quarterly standpoint, you got to view the market on a 3 month time frame, not to trade off of, just to get an idea of how bullish or bearish we currently are, right? And if you look at the Dow Jones, for starters, you can see that we've been building structure every quarter, right? We rally, we base, we rally, we rally, we base, we rally, we rally, we base, right? And now we're looking to rally and take out all-time highs. We still have a month and 16 days left in this quarter, and that's just the Dow Jones. Let me take you over to the S&P 500 and look at it on a quarterly theory, right? You look at the Dow Jones, and we all know how market structure works, right? We put in higher highs and higher lows, right? Well, what have we been doing since October? I mean, this is the October candle. We rally, we base, we rally, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. 1 month and 16 days left in this candle. At the end of the day, the instrument that you're trading, really, its main goal is to go higher, right? So whenever you're like aggressively bearish, right? Just because we're at resistance, just because we're at a high or blah, 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 right? Like, doesn't matter to the market. The market doesn't care. They have endless amount of capital. They can keep this thing going forever, right? The market can stay irrational longer than you can stay solvent. Just remember that. So if we look at the NASDAQ, which is the most popular of them all, right? Look at what it's doing. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And look at the 3 month candle. Like, there's no sellers, right? As much as you want to think that there's sellers in your, whatever, at the top of resistance or whatever, like, just zoom out and you'll understand that there is a much bigger game being played that you may not get. Draw a trend line on the 3 month chart on your perspective instrument and just tell me what continues to happen at that trend. I'm not telling you to only long the market. What I'm trying to tell you is that if you think the market is too high to go long, you're incorrect, because they have a much larger target. If they get above this high in this quarter, guess what? They're trying to put in a higher low the next quarter and they're trying to go higher, right? My thesis is that they won't start selling until the summer. They're going to get back on schedule, but that's just a thesis. They can continue to sell past the summer and completely prove me wrong. My point of taking this opportunity to bless you guys with this information is to just let you understand, like, yo, it's okay to buy up here, right? Obviously, you want to buy it in accordance with your entry model, but you don't have to be a top ticker. You don't have to be the person that always is trying to be like, yeah, this is where the selling is going to start. I'm going to load up on puts. I'm going to short the market. You don't have to be that guy. All you got to do is follow the major trend. And the major trend, no matter how we slice it, no matter how many ways I say that the market could potentially sell off here, at the end of the day, we're in a bull flag pattern for the last 3 to 4 months. And it looks like now the market's trying to break out of it. But that being said, of course, I'm going to break down my bearish and bullish thesis leading into this week. So let's start with the top-down analysis. Let's look at the monthly chart, and we can see on all three instruments, all three look really strong to the upside. I mean, the NASDAQ literally has no wick at the top, right? We're 12 days into this month, or 12 days left in this month, and we haven't even sniffed the lows of last month. Like January, we haven't even sniffed them on the Dow Jones. The S&P 500, we came within 50% of them, but again, we haven't even sniffed the wick of January. If the market continues to put in higher lows on a monthly, it's definitely going to do it on the weekly, the daily, and the 4 hours. Spoiler alert, we're about to go through all of those, and I guarantee we're going to see the same thing on those time frames, right? So let's go down to the weekly, right? And we take a look at the Dow Jones in the top left. We can see that we've dojied out a couple times up here. Sellers or buyers have tried to push through this all-time high, and they keep failing. However, they continue to find support at a higher price, which in turn creates a proverbial short squeeze, right? The more we continue to tap these highs, but we're not having to go back down here to find more buyers, that means that the buyers at this level closer to the high are becoming stronger, which will ultimately turn this area into discount, break out of this area, and this will no longer be a premium price. This will be a discounted price as price continues to rally up. We look at the S&P 500, we got the same story being told on the weekly time frame, right? If we just pay attention to what's happening at the lows, right, you'll understand that November 4th candle never got taken out. It was followed by a higher low that was put in January 13th. That created a higher high that was put in January 21st, day after my birthday, shout out, right? And that was followed by another higher low put in on February 3rd. And now it looks like they're trying to put in a higher high. Again, if you're trying to short this market, you can do it, but it's going to be quick. It's going to be fast. Until these bulls decide that they're done, I think it is very, very, very asinine to continue to try to short at the high just because we're at the high, right? I'm not saying you can't go short. I'm just letting you know, like, the market on a higher time frame does not agree with the shorts. I don't care how you look at this. I've looked at the yearly, I've looked at the 6 month, the 3 month, the 1 month. It doesn't matter. However you look at this market, it looks extremely bullish. I don't like it. I hate trading it when it's like that, but I'm going to follow the current trend until the current trend is no more. Okay. If we look at the weekly on the NASDAQ, we came down to the lows. Remember, November 4th never even got touched on the NASDAQ because it's completely driven by tech sector. The tech sector, even through all of the sell-offs we've had in individual stocks inside of the Mag 7, i.e. Tesla, Microsoft, right, and a little bit from Apple. The other sector, or the other 4 stocks, Meta, has hit an all-time high for the last 22 days. 22 days in a row, this thing has been green. If you guys haven't paid attention to Meta, it's literally at like $7.20 a share. I remember when Meta was like at $150. It's crazy. But ultimately, what I'm trying to say is when one of the Mag 7 goes down, they just move the money to another sector inside the Mag 7, and it continues to hold the NASDAQ steady and even find higher prices. We look at the daily chart, right, on all of these instruments, right? I'm gonna switch over to the NASDAQ as well as the Dow Jones, all right? So, okay, we look at the daily, and this is what people get. They get a little bit, I wouldn't say confused. I would just say they get bearish, right? They start looking at the daily and then like, look, this is higher time frame. I'm like, yeah, it is a version of higher time frame, but it ain't the highest time frame, right? Like we went over the 3-month chart to start this breakdown. And if you look at the 3 month, the daily is like the 1 minute chart to the 3-month chart, right? Like it really, the daily doesn't mean anything to the 3-month chart, right? It's feeding the higher time frame, but ultimately the 3-month chart, the 6-month chart, the 12-month chart, they're leading this charge, right? So we see the daily, and what do you see? Do you see anything definitive to the bearish side, right? What I see is a falling wedge pattern at the high, right? Followed by a ton of consolidation, right? Ultimately, what I gotta do is, whether this breaks to the downside or not, I have to be objective. Objectively, what am I seeing at the lows? Objectively, January 27th brought a low. Objectively, February 3rd swept that low. Objectively, February 10th put in a higher low. Objectively, February 12th put in a higher low. Objectively, February 13th put in a higher low. And objectively, February 14th put in a higher low. We have yet to put in new highs above these equal highs up here. However, at the lows, right? If I'm looking along the market and they continue to buy at the lows, what is that telling me? That's not really telling me that the market's trying to go lower. It's telling me the market's trying to go higher. It's screaming we want higher prices, right? We're willing to buy higher than we were 2-3 weeks ago, and now we're consolidating to get the market to push higher, right? Until that changes, that's objectively what's happening. Same thing on the S&P 500. I talked about November 4th way back here, right? And ever since that time, no matter how many times we come down here, we continue to put higher lows from the November 4th candle, right? Higher lows, higher lows, higher lows, even some higher highs in here, right? With the all-time high being basically the only thing left. From the bears standpoint, the only thing that I could shout out from the bears is, hey, they finished with my favorite candle at the top of trend. They finished with a doji candle at the top of trend, and maybe we get a pullback, pulling back into 60.97. I got us pulling back into like 60.83, 60.87, and we'll go through that when I get down to the 4 hour. I'm not saying that the market won't sell off, because for the last 2 weeks, I've been saying the same thing in the top down analysis. If you wake up and Tokyo has given us an aggressive sell down or a gap down, it is not bearish, it is bullish. And yet every time I wake up and people get to trade it, I look on YouTube and I see people shorting the market after this aggressive pump. Look at this. This is S&P 500, January 27th, Sunday, we dipped down. We talked about it on Sunday. I said, don't be surprised if we gap down straight down to these weekly levels and then start buying it back up. We did it on Sunday. Everybody was bearish. Oh, Trump this, tariff that. All right. The following Friday ends and we gap down again. Everybody was bearish. Oh, tariffs is over. Okay, cool. This is bullish. Whenever the market puts in a low for Monday or Tuesday, it is bullish 70 to 80% of the time. It is very, very bullish. So I'm gonna say it again. Until this market starts putting in the high, right? It trades up, i.e. it trades up during Tokyo, right? Or the high in Monday or Tuesday. Until the market starts to do that, there's no reason for me to look at the market from anything other than a bullish standpoint, right? Hell, even if it trades up and it goes up so far, yeah, it's gonna come down, but ultimately it's gonna come down to go right back up to that high and just not break it, right? So just food for thought as we move into next week, right? We go down to the NASDAQ. I'm sorry, this was on the 4 hour. We go down to the NASDAQ, it looks even more bullish, like consolidation for probably 2-3 weeks and then a breakout to the highs. Let's see if the high holds, right? Because this could be manipulation as we come and take out these highs, right? And then turn around and come back into the range or completely displace, right? We could get that. But right now we have to be objective in what we do have on wax. Any other thesis would just be that. It would be an unproven thought. That's what a thesis is, right? It's up to the market to prove my thesis right. So objectively, I can only read the price action that's in front of me. And objectively, we made higher lows, we rounded price at the lows, and objectively, we got over the equal highs. And now we're looking like we're pushing into the next area of confluence, which is 22,251. That's kind of like the boss level of the market, right? If whichever one of these instruments takes the all-time high first, side note, the underlying S&P, the Qs, they've all taken their all-time highs already. So we're just talking about the futures, right? And if I was to turn B adjustment off, I'm pretty sure the futures are already at all-time highs, right? This is just adjusted to the current contract. So just to give that a little perspective as well. So let's drop down to the 4 hour chart. I'll break down some of my levels for the week, and then we'll go into the news catalyst for the week, discuss the volatility index, and then we'll get you guys out of here, right? So let me go into my little object tree here, turn on the top-down analysis, turn on the PM session chessboard, because we'll need that for measurement purposes. Do the same thing for the S&P 500. Okay, good. And then let's do the same thing over here for the NASDAQ. Right there. Okay, cool. Okay, so we'll start with the Dow Jones, because again, that's what I trade on a regular basis. I do this top-down analysis for multiple instruments. It's not just the three that you guys see here. I do it for a few other instruments as well. But for the main instrument that I trade, this is like my baby, right? I like to make money over here often, right? So if we look at this objectively, okay, what we have is a rising wedge, two back-to-back rising wedges coming back up to the highs here. This looks like it could fall, right? It definitely does. But let's just talk about what's happening inside of this rising wedge, right? I think it's important to discuss it. We look at the rising wedge, the only thing we're getting is higher highs, higher lows, higher highs, and now this higher low. So as long as we stay above this low here at 44,182 and ultimately above 43,963, I still have to give the nod to the bulls, right? At the end of the day, I want us to trade back below weekly fib, which would put us back in the discount, maybe tapping into the February 9th in-wall, right? Or into this little demand area right here, or even all the way down to this fair value gap that I have right here. Ultimately, that's how I'm looking at price to be a bull. I want to see us trade down, get back below the weekly fib, tap into some of these levels, and then let's go back up the rest of the week. To be a bear, which is, very hard to be these days. However, to be a bear, I do have a plan for that. My thesis to be a bear is that we trade aggressively to the upside. Like we open up Tokyo, we gap up, and we just start pumping, right? Getting everybody super bullish. Everybody's gonna feel like they missed the move come New York because, Tokyo, Sydney, Tokyo, and London just continue to rally, right? New York opens up and it continues to rally, and everybody's like, man, reason to short this market. And then when they get to one of these weekly projections that I have up here, they rug pull it, right? That right there. And if you want an example of that, take a look at what happened to gold last week, right? Go look at what gold did starting Sunday night, right? I mean, it was on a historic rally starting from Sunday. And by Tuesday, it dropped down. Wednesday and Thursday, they bought it all the way back up. And then Friday, I promise you, gold dumped like 60 points on Friday. Doesn't mean that the uptrend is over, right? It just means that it was time for a retracement. And the best way to do that is to get everybody extremely bullish, right? Rapidly pump up price, right? So nobody wants to short and then rug pull it, right? It's consolidation, right? Which is what we have here, followed by manipulation, right? Which would be that crazy rally that I'm discussing. And then displacement, right? Or expansion back to the downside, right? And that could be a major dump, right? A major dump. That's for the bearish activity. So what levels am I looking for this week on the Dow Jones? Well, my weekly projection, as usual, the first one comes from the weekly fib. So I'm looking for the market to retest 44,491. Like I said, we still have that in wall below that as well. So 423 through roughly about 376 could also be in play. But from that level, we have on average, our true range is about 2.62%, which sits us right at all-time highs at 45,657. So to the bullish side, that would be my first target, looking for the market to hit. My second target, 2.60%, that would basically be from the previous day high. If we trade back above 44,865, then I'd be looking for 2.6%, headed up to 46,033, right? Again, if these levels get hit early on in the week, it's going to make me more bearish than I am bullish, but it just depends on how the delivery of price is, right? To the bullish side, obviously, if you want to be a bull, you don't want to trade long up here. You want to see the market trade down first, right? I mean, obviously you could trade from here because we're already at the low, but to start the week, I would like to see that weekly candle come down and create that weekly wick, right? Areas that I'd be looking for, right? In order to be a bull, or in order to be bearish, I apologize, I'm looking for the market to reject the weekly fib, right? So if we go up first and then we come down from the weekly fib, I'm looking for about a 2.61% move, right? From the weekly fib, which is sits us at about 43,325. That is the weekly average over the last 10 weeks of price action. It's based off data, not my opinion, right? Objective versus subjective, okay? From the daily fib, which is more likely that we trade up into the daily fib or the top of the range, I took the measurement from the daily fib. I have a weekly projection that actually lines up with the daily demand zone as well. So from 44,733, I'd be looking for about 2.61% from that level. And that would sit us at about 43,573. Other levels that I'd be watching in between price is obviously the current in-wall. I'm guessing that whenever price opens up tonight, it's going to create another in-wall on top of this one. I won't be marking that. But the in-wall here and the in-wall here, I remember telling one of our Discord members, whenever I see these in-walls start to stack on top of each other, it's a good sign that they're going to be balancing out in between these two in-walls. So wouldn't surprise me at all if we push down and then kind of balance out between these two until we decide which direction we want to go. Ultimately, I'm leaning toward the higher time frame. the 3-month chart, what we just talked about, being more bullish than bearish. So if we trade down, again, gap down at the open or something crazy like that, then you got to give the nod to the bulls once again. Now, over here on the S&P 500, again, we're at the ultimate high. This is where all of that selling pressure came in. So this would be a great opportunity for the market to push down from this area. Actually, I'm kind of banking on it because I'm bullish, right? I'm banking on the market pushing down from this level, right? Which the bullish plan on the week, based off the last 10 weeks, we're looking at about 2.79%, 2.75%, depending on where you measure from. So from the weekly fib that also sits inside of a 4-hour demand zone, it's a demand zone because this low created a high above this high. Did not take out the swing high, but nobody has yet, right? But I'm counting this as a demand zone only because the weekly fib is so close to it that if we get below it, we'll automatically be in discount. So that's a good demand push for me. And honestly, you could actually mark it over here at 60.70 and 60.70 to roughly about 60.35. But I have in walks down there for that, so I didn't need to stretch it that far. That being said, what am I looking for? I'm looking for us to retest the weekly fib at 6079. And then I'm looking for about a 2.79 push, pushing us into that 62.47.25 area. If we don't go as far as the weekly fib, and this is possible because on Friday, this level was damn near impossible to break. We stayed up here for, I think, 24 hours, 4, 8, 12, 16, 20, well, maybe 20 hours, but we stayed up here for a long time. So if we trade down, we may not even want to give up the previous day low. That's why I took my second measurement from 61.21, which pushed us into about a 2.75% weekly profile and sits us at about 6,289. I will note that when I'm looking at the weekly profile and the data, right, what I'm seeing is that the percentage of movement per week is starting to decrease a lot, which tells me somebody's getting exhausted, right? Or somebody's getting absorbed. The bulls could be getting exhausted, or the sellers could just be getting absorbed, right? It's one way or the other. But the fact that the S&P 500 underperformed by probably like 0.5% last week, it lets me know that this level is very, very strong, right? And the sellers are looking to potentially defend it. So we'll see what happens. Doesn't mean that they're going to defend it and take it all the way back down. Just means that we could be in for a bit of selling starting the week. If we move over to the NASDAQ on the 4-hour time frame, it looks about, the stronger of the three, right? You can see the reason why, though. You should note the reason why it looks more stronger. It looks stronger than the Dow Jones and the S&P 500. It's because of structure, right? On the S&P 500 and the Dow Jones, they're already up at the daily supply zone, the daily resistance. They're already up here. The NASDAQ was way down here, right? So it had to continue to rally to get to this level, right? And this is the ultimate test for the bulls. If the bears fail here, we will get a short squeeze of dynamic proportion, right? Because if the bears cannot hold price up here, the market is going to short squeeze everybody that's been sitting up here trying to load into puts, right? I've watched a few videos where they talk about a lot of people are loading into VIX calls here, expecting a major dump. And whenever I see stuff like that, sentiment wise, that everybody around me is so bearish, it makes me just look at the market sideways and be like, well, that's too obvious, right? The obvious thing to do is to come up here, reject, and dump. When has the market given us anything obvious this year, right? Every single opportunity for the bears to step in, objectively, they have failed. So I expect them to fail here as well. Until they show me something different, I fully expect them to fail, especially if I see the market trading down to start the week. That being said, I didn't mark this demand zone, but this is a beautiful demand zone at 21,889. I only didn't mark it because I have the weekly fib there as well. So I'd be looking for the NASDAQ to come back down, retest those 21s one more time, tap into the weekly fib at 21,817. Then we're looking for about 3.94% on the weekly profile, which pushes us up above all-time highs and into blue sky territory at 22,675. If the market doesn't want to come back down and retest this, leave this for later, i.e. the scenario of being bearish for the week, right? Leaving gaps like this, leaving consolidation like this. Bearish would mean we don't come back and test any of this to start the week. We rally aggressively, right? From the low of the range, right? 22,950, and aggressively rally toward 3.9% at 22,953. If I see that, On Monday, I'm looking for Tuesday to bring the lower high, and then I'm looking to short all week, right? So as much as you're hearing me say bulls, 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 if I see this market trade up on Monday and Tuesday, I will be a bear following the rest of the week, right? Bearish, right, to a fault or to a point, right? Because I don't think the market's going to reverse. I just think it may retrace and finally put in a lower high, right? So that being said, my secondary level, like I said, would be 22,090.50, looking for a push into 22,953. To the bearish side, right? What am I looking for? I'd be looking for the market to trade up into this daily supply zone, fail to take out all-time highs, right? And drop back down to the previous week's weekly fib, right? So I'd be targeting 3.9% from the daily supply zone at 21,450.50. That measurement was taken from the daily supply zone over the last 10 weeks of price action. The last area that I'd be looking to measure from would be the top of the range at 22,224.75. 3.87% would take us to about 21,361, and this would be a significant drop considering that it would break the lows of this consolidation and convince me that maybe, just maybe, the bears would like to show up. In regards to the NASDAQ, I like the setup on all three instruments, but I would prefer the setup on either the S&P or the NASDAQ because I would like to be bearish, right, if the market trades up. For the bullish setup, I prefer the Dow Jones because it looks like it's already about to trade down a little bit, right, and look to go long much faster than the NASDAQ and the ES. If they rally up above here, it'll be a sit on my hands type of night, right? But if I wake up and the market's up here, then it's going to be definitely a London play. That's my breakdown for the three indices. Let's go over to the volatility index and give a quick breakdown on it. Then we'll go over the news and we'll get you guys out of here. We look at the monthly on the volatility index. Again, if you don't know about the volatility index, it's essentially the reciprocal of the S&P 500 stock options market. The market is very bullish, so therefore the VIX is going to be very bearish. We can see that this is the exact same structure that's happening on the S&P 500. But things to note, if we're looking at this potentially being bearish, things that you should note is this rejection block. Shout out to the ICT traders right here, right? This rejection block inside of this wick here, we're tapping into 50% or the CE of, what month is this? This is July 1st month, right? If the bulls can somehow defend this, then it's gonna lead me to believe that now the bears are gonna defend the same area on the S&P 500. We drop down to the weekly time frame. We keep in mind that same monthly rejection block, right? And we can see that now we're also looking at the low that brought a new high structurally. These lows got above these highs. So structurally, this would be a great area for the bulls to for the bears to step up. Will they do it? I don't know, because they haven't done it all year. And when they do, they bring price right back up. It would be a great opportunity, in my opinion, for the market to push down back up to the top of this range, get all of the bears excited, and then just pump it right back up on their ass, because the VIX is ultimately in a day or weekly and daily, monthly range. Look at the daily chart on the VIX. We're coming up to the lows, going back down to the highs, or coming up to the highs, going back down to the lows, vice versa, every single time. What has the market been doing? The exact same thing. We've been in a range on the market because we've been in a range on the VIX. Nobody really knows which way this market is going to go. But, I've heard historically, right? I know that's not really valid, but I've heard historically that whenever we get a new presidential regime, the market loves to consolidate in these large ranges inside of that first or second quarter. I would have to do further research, but I honestly just don't care enough to do so. But right now we're seeing it. Objectively, we're staying inside of a range. Let's move over to the news for the week. If we're looking at Monday, again, it is a shortened holiday. I don't really give a shit what day it is. The market's gonna market, right? I think I've matured past the level in my trading where I look at holidays and be like, yeah, you don't want to trade that day, because I've just seen it too much where holidays, the market goes one direction. So yeah, I'll be up bright and early like I always do with a pre-market plan and trading the market inside of London session, just understanding that the market may become less volatile toward 11 o'clock, right? All it means is that the big banks won't be there to manipulate price. That's all it means. And that's actually a good thing. But, Listen to people on social media, they'll tell you you should never trade holidays, right? So anyway, on Tuesday, we have Empire State Manufacturing, and not to be dismissed is the Canadian CPI, right? They're like our neighbors from across the way. We're giving them tariffs. They're giving us tariffs. I think this will actually be important, honestly. I think the market will actually move on this 8:30 news on Tuesday. But of course, the real news, right, is this guy, right? Like, President Trump is speaking on Tuesday, tentatively, probably around noon, just to fuck up the options game, right? You know, AM session is probably going to be trash, and then we're going to get some crazy pump at around 12:30. Then he's going to come out and speak at 1, and then the market's going to do what it was going to do all along. Just remember, if it's in the news, it's already in the price. And what we're reviewing right now, although it seems like it's going to be unexpected, the market's already priced this shit in. They may not know what President Trump's going to say, but they've already decided how they're going to play it. Guarantee it. So just understand that just because the news is here, it doesn't mean that you should play the market any differently. I follow structure and I like to know what's happening, but I don't play off the fundamentals. Going into Wednesday, housing starts, FOMC meeting minutes. The market could consolidate. It could do whatever it wants this day. But again, yellow folder news, not really anything crazy happening this week. We're getting into that third week of news. And after having so much news the first 2 weeks, the market's kind of simmering down in regards to news. If we go into Wednesday, we got not consumers confidence, that's Europe. CP leading index, natural gas, the Widowmaker, right? Crude oil inventories. And then, like I said, nothing really crazy on the docket besides a bunch of FOMC speakers. Friday, we close again with flash manufacturing PMI, services PMI. So, and then revised consumer sentiment. This right here is going to be very important. Very, very effing important. Hence the reason why I believe this could be a week where we sell off, right? It could be a week where the market pushes up to come down. I don't mean sell off like reverse. I think this could be a good week to scare the market. And the reason why is because we're closing with revised consumer sentiment. If you guys remember, the last time we dumped, it was because we got the consumer sentiment and the inflation expectations from the University of Michigan. And they were basically, their data was saying that we were going to pump inflation back on the rise. So if this revised data is worse than the previous data, oh yeah, we're definitely going to get a pullback, right? But again, I just think it's going to be after an aggressive rally. So if you see the market aggressively rallying in Tokyo and London, remember these words. That just means we're going down by Friday, right? Those are my thoughts on the top-down analysis, ladies and gentlemen. I hope this was helpful for you. If you guys have any questions, please at me in the chat. I will do my best to give you more information. That being said, my name is T. Hobbs. We'll catch you on the next one, man. Peace.